we look forward to 2013 and what the future holds for the intermediary community, we think one thing that came up very strongly in the conference today is there's a general belief that the market is going to shrink in size. There's about 24,000 whole of market advisors today, and we think that probably will move closer to the 18,000 mark within 2 years. What do we see happening? Well, we see sort of businesses going two ways. We think businesses will either be small, they'll be local, the brand will be very personal, and these will be really sort of high-touch IFAs offering a great ongoing service to their clients. Or we think the other sort of end of the spectrum will be the big scale players. We see the nationals coming out, and it's all about processes, centralised investment propositions, and working with platforms to deliver sustainable and repeatable outcomes for customers. So we really see the market moving, and there's a lot of debate about which model is best. I'm not sure you can say any one model is better than the other. It actually ultimately comes down to the individual giving advice to the customer. For those IFAs remaining in the industry, we think there'll be a lot of clients for them to service. The bigger issue, we think, if you look across the RDR, is what happens to those clients who can't afford advice, and that is the gap at the moment, which is not addressed by the simplified advice comments coming out of the FSA. That's the gap we need to address. For the intermediary community, I think the world looks pretty rosy.
We've invested a lot of time, effort and expertise in building a really sincere and scalable financial planning model. The key thing for us is to continue on that journey. We're very happy with our strategy, we're very happy with our advisor engagement and feedback, and we're delighted with the client reaction to it. So the answer to that question is very simple. We're just going to keep on doing what we're doing.
I don't anticipate significant changes, to be quite honest. We're a firm of chartered financial planners, and we set up a niche business in 2007. As such, we've been RDR compliant pretty much from day one, in as much as we've been fee-based. We have a very defined client segmentation that our client base. Our clients are absolutely comfortable with the fees that we offer and the value that we've been delivering to them over the last 5 years. And we've been a profitable business since our first year. So in that respect, I don't see any significant changes. We do see as opportunities that there's a significant gap in the market where the banks are vacating in the 2 to 10 million space, which we're going to be looking to exploit. We're also developing a new service offering for trustees that we think is going to have a significant impact on our business. So it's really all very positive.
I think the biggest change will be the vertical integration of all of our processes that we deliver to clients. So up to this point, we've delivered the advice process and the life planning process, but we've always outsourced investment and platform technology to other companies. We hope to, in 2013, bring that all together so we overview the funds for our clients on our own platform. So when the clients come in and see us and give us money to invest on them, we don't give it away to invisible people in invisible institutions. The client can have confidence that their funds are being invested and overviewed by the people that they trusted in the first place.
I think the market environment is going to get a lot more favourable for us. We started last March. We're a small firm, 5 registered individuals. We tend to specialise in mass affluent wealth. Our typical clients are around 150, 200,000 of investable assets. We're already users of wraps platforms. We were already doing effectively advisor charging. It's only the official paperwork really that's changing. And the banks disappearing from the marketplace, no longer giving independent financial advice on the high street. That's a huge bonus for us. And frankly, the people who are vanishing from the industry, who are disappearing as IFAs because they can't cut the mustard, are leaving an awful lot of orphan clients who we think will be receptive to our kind of proposition.
I think 2013 will be an exciting opportunity set for everybody in this industry. We've been operating in an RDR environment for a couple of months now, but it's very early days, and we really need to be able to proof set our proposition with our clients and make sure it's really doing all the things for them that we want it to be done, want it to do. For us as a group, though, the other key component of 2013 is bedding down our new operating platforms and ensuring that we have the ability to take the opportunity set that I think will deliver itself towards the end of 2013 and beginning of 2014 of consolidation in this industry.
Well, we're a small, relatively newly formed IFA business, and so in many ways we don't have some of the challenges that a lot of more established firms have. We're already offering financial planning on a fee-only basis, so a lot of things I don't think will change, but of course the context and the background in the marketplace will change, and I think that will present some challenges. I think clients are a little bit confused about what the new rules mean. I think the media's a little bit confused. I think there's a lot of firms out there that claim to be offering financial planning, for example, that aren't offering actually financial planning in the way that I understand financial planning should be offered. So I think maybe our key challenge is not necessarily changing the way that we do things, but actually effectively communicating that and getting cut through in our messaging to our customer base. And I think there'll be new competitors coming out of it as well. I think there'll be organisations that are targeting consumers directly, maybe even non-traditional financial services companies like Google or Tesco and so on that might start to try and attract customer bases as well. But overall I think we're well placed, and I think we've got lots to look forward to.
I think IFAs are going to have to re-evaluate their business model, and they're going to have to focus much more on communication with their clients. I think with that is going to be a decision they make about whether they undertake investment management or not. Communication is going to be absolutely crucial. Some advisors will undertake investment management, others won't, and I think it'll become much more black and white. With that, they will decide to delegate and outsource the investment management to third parties such as ours. And I think our relationship with advisors, we'll have a stronger relationship with a smaller number, relatively speaking. So we'll have a more mainstream relationship rather than perhaps a casual relationship with more IFAs. And I think they'll outsource some segments of their business rather than pieces of their business. And that's really the upshot. We're hoping to build our business with the IFA community to assist them in meeting the generic financial advice requirements of their clients and allow them to communicate and undertake the client relationship, and we'll get on and do the investment management and support them in the investment management.
I think one of the main challenges for advisors is going to be about advisor charging, particularly for firms who haven't used a fee basis before. Because what they're now having to do is to be able to demonstrate the value of their services to clients in order for them to pay for those services. And this is going to be a new area for some firms. Now, I think when Linda Woodall was talking about proportionate regulation recently, we were referring to the fact that there may be a degree of leeway for advisors as they make this transition into the fee-based world. That said, we'd obviously like to reiterate that if any firms are acting inappropriately and causing customers detriment, then we'll still take a hard line on in that situation. But I think I've been in the industry for quite a long time, and I've worked in the advisory side before, and I've seen advisors and their ability to adapt to new scenarios and their resilience. So I think there's very good scope for firms to be able to deal with this transition, and so I'm quite positive about the market moving forward.